Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, October 9th, 2019. This one I will keep quick. Just want to touch on the broad markets real quick and then look at gold and silver maybe, and maybe crude oil, and then wrap this one up. All right, so here's what's going on right now. We have QQQ up, but still down below. It's entering. It has, I should say, once again entered yesterday's gap. In other words, we're looking at the 60-minute chart. I'll turn all these lines off, keep it very simple. You had the gap down yesterday right here, and we entered it yesterday, and I suspected we would get rejected and not fully backfill it, and we didn't, and it was pretty impulsive when it failed, because gaps once entered are usually backfilled. Therefore, gives us, once again, the odds are pretty good if we get a little higher. I'm going to show you why, because then SPY will be into its gap. It's probably a logical target this time. We've been in it, kind of inching our way up all day. You can see in these candles, not very impulsive, but that's going to be resistance. So basically, let's watch and see what happens if and when that gap is backfilled. If for some reason they fail to backfill it and we start to move impulsively lower, that's pretty bearish. Because again, gaps once entered are usually backfilled. And so here's a trend line we can watch as well. We can look at this trend line off the lows recently. Candles have been a little choppy through there, so you have to give it a little room. So let's see what happens here. We have this kind of triangle pattern forming. Should QQQ take out the, move much above the top of the gap, about 188.15, then you have a potential, I call it a potential downtrend line, because we don't have a third confirming reaction so far, and it still has plenty of work to do on the upside. Keep in mind, again, just to reiterate, the very near-term trend, not the longest-term trend, but the near-term trend since the highs here in early September is still bearish at this point in time. So right around the top of the August trading range there, that's at 189.40-ish level, that's about where our previous reaction high comes in. So anything much above that calls that near-term trend into question, and then you have a run at the 190.53 level. You have two reaction highs there. I know I'm making a mess of this chart right there. Here, we'll turn off the lines. And so these are levels to watch. If we fail to take out that previous reaction high, we turn down soon, then you want to look for obviously a break below the recent lows. But I think probably as important as that, of course, that would keep the near-term downtrend intact. Downtrend simply being a series of lower highs and lower lows, and that's what we have so far still. So to keep the downtrend intact and to continue it, we have to take out that previous low. Whereas if we take out these previous reaction highs, and this is the one I was talking about, just above that reaction high, there's really about two equal highs there come in around. Again, I had that level already marked up here at about 190.50 or so. So that's what we're watching on QQQ. Not very impulsive buying so far today since we entered the gap. And one thing that's going on too is SPY at the same time is struggling. It has entered its gap now, so shortly after I started the video, or a little before I should say, it started to move in. Now what I'm referring to is there's two gaps here to contend with on SPY. Yesterday's gap right there, from there to there, and then this gap here from the other day. And so where some traders are probably eyeing this gap, yesterday we got into it, but we were smacked down at the bottom of this gap from last Wednesday, and so that's what we're pushing against right now. So pretty much it's the bulls have the opportunity, at least, or I'm talking bulls metaphorically, longs, to pop this up and get a backfill of that gap. It's actually, believe it or not, better for the bearish case if it were to happen, and of course then we reverse, because it doesn't leave any unfinished business. Sometimes when you leave an unfilled gap, that's unfinished business, because most gaps tend to be backfilled at some point. This one, for example, there was a gap, it was backfilled there. So right now we have a gap here that has yet to be backfilled. So now anything much more than a backfill, again, you have a potential downtrend line coming into play, and we do have three reactions on this one already, so it's already validated, and you can see it comes in right about 294. So that would be, this is a pretty significant resistance level, and let's just say right now about where I'd be comfortable with to keep to say that the bearish case, the near-term downtrend, is still very much intact, it would be right under that level. You want to see that 294, and don't forget the reason that's color-coded blue. It's a significant level. That was the top of the August trading range there, and so a very significant level on SPY. And as I said, the fact that we had a breakout of that level last week and it failed, that to me is pretty bearish. Bulls should have had the opportunity, or they had the opportunity, should have capitalized on that, took it and run from there, and didn't. It was that breakout proved to be a false breakout with a pretty impulsive rejection following that, a big gap down, and so that's where we're at. So these are the levels to watch, and like I said, I showed you a potential uptrend line there I drew. Let me add it here. Put it on here now. I can see the makings of a near-term uptrend. So we kind of have this triangle pattern. You can either pull it down like that. I like to come in and capture all these candles here. And also keep in mind you have a potential downtrend here. You have 1, 2, 3 reactions up to that point, 4 reactions here with a couple candlesticks there, and so there's just one big old triangle pattern, if you will, on SPY. And so again, bulls want to see a breakout up to here and take out these previous highs at the top of that triangle. Bears want to see this, and it can go either way. Just respect it. So right now the near-term direction's a little uncertain, other than a good chance they're going to backfill these gaps today. And on that, I always like to say, resistance is resistance until and unless taken out. So you want to see the catalyst for a backfill. It's that big, big for near-term traders, active traders. 77.21. Been harping on this for a while. Last few days here, we had support there at 77.21 on NQ right there. A lot of reactions along that line. Danced along it numerous, at least a dozen candlestick tags there. Finally broke down. That was our sell signal the other day. Went down, came back, back tested it again. Perfect rejection there. There was your second objective shorting up for an active trader. Came back again this morning, another objective shorting up, and we're here now. Now the point is, we keep, usually you break down, back test a level, and that's it, one and done. The more you come and knock on it, it's just like having a stock above support. When it's tap, 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 finally the floor is going to break. So I have to say that this point in time, we're looking at a breakout of that level. It seems pretty likely, and that would be a break above 77.21, so called 77.22. And there's this downtrend line off the highs as well, that blue downtrend line where we had that false breakout the other day. So it's tough right now. My convictions aren't high. If we break it and it's impulsive, like I just showed you a minute ago, there's plenty of overhead resistance levels, so it's hard to say how far we're going to go, but near term it could bring in some buyers. Likewise, if we fail here again, we've hit it a few times, and doesn't mean that because we've come back and tested it 3 times already that it has to break. So I don't know where we go from here, but with the current trend being bearish, I have to give the benefit of the doubt to the current trend, which says whether we break it and pop a little bit, clear out some stops, or fail here, we go back down. That would be my preference right now. There's probably a little downtrend line we can draw here too. That might show better on maybe a 5 or 15 minute chart. This is a 60-minute chart here, so watch that. So these are the levels to watch, and again, some pretty big resistance overhead to contend with if it does break out here. Really not a lot on the daily charts to cover today, so I'm not going to go into those. We're this week right now, just like we closed Friday, where those candles were still not far enough below those December 24th trend lines. I'm talking about XLK and QQQ on the daily chart. It's still anybody's game right here. So the near term and even intermediate term outlook for the next several weeks to months is still uncertain, because if they can pop this market up and take it much above where we're at now by maybe 3, 4, 5%, probably going to go on and run up to new highs, because we'll have invalidated this downtrend. Again, you can see if look at it this way. Here's the previous reaction high right here. So bulls want to see that level get taken out at about 77.90. That should open the door for more buying, unless it proves to just be a little whipsaw. And of course, bears want to see the recent lows get taken out. And likewise, we have triangle patterns on the risk-off assets. Gold. I'll just touch on gold and silver right now. Gold has that key. We'll call it the golden 1492 level right there. Just numerous reactions. The bigger picture on gold, it is in a bull market. It's been moving up strong all year, but it's for the last few months here, last couple months at least, it's been consolidating in this big sideways range. It's been some ups and downs within there, but for the most part, this is sideways consolidation. We're only looking at a 60-minute chart here, going back to about early August. So, and you can see most important level on this chart, bar none, is the 1492 level. Numerous reactions. We had a brief breakdown below, whip back up, regain that level shortly afterwards, and we've successfully tested it again. So where do I think gold goes? Well, I can tell you it most likely will depend on where the market goes, because that whole risk-on, risk-off relationship has been pretty tight lately. What I mean by that, there are times where gold and the stock market are not trading inversely. In other words, I've seen times, and you probably traded long enough, seen where gold and the stock market is rising or even falling together. But lately, it's been one or the other. And so, therefore, if you zoom in a little tighter here, the resolution of this triangle pattern and where gold goes from here will most likely depend on what the market does. If the stock market breaks out of those levels I told you, those overhead resistance levels, and does make a run to new highs, we will most likely see a breakdown of at least this uptrend line here, the triangle pattern. This is what I'm referring to, this triangle. And quite likely, if the market goes to new highs, good chance you can see gold lose 1492, and then we'd have to zoom out to a little bit longer term charts to see where it goes. Otherwise, remember, the trend in the market, the near-term trend, still bearish. And so if we fail here, whether we backfill the gaps or fall shy of backfilling those gaps on QQQ and SPY, and we start to move lower, especially if we take out the recent lows, then you'll probably see a breakout here. And this very much has the potential breakout of this triangle, especially if the market can go on down and take out the recent lows and give us some, particularly if we get some sell signals on the weekly chart that I'm looking for, solid weekly closes below those 40-week exponential moving averages, start to get further away from those December 24th trend lines on XLK and QQQ. If that happens, then I think gold certainly has the potential, most likely will go on to break out of this trading range that it's been in for a while now. It's certainly corrected, worked off the overbought conditions on the daily and weekly charts, and obviously it still needs to get above that recent high. So there's a potential for that. Of course, just as easy, the potential for this. I don't know, and that's what the nature of symmetrical triangle patterns are. They're indecision patterns. This is not a continuation pattern. In other words, we don't have a strong trend leading up to this or a strong downtrend. We are in a sideways range. So again, the near-term direction is pretty much unclear, and it will most likely depend on what the stock market does. Silver, similar picture. Let me grab that chart for you. I know we're just looking at futures now, but anything big happens, I'll post updated charts on GLD and SLV. There's the triangle pattern in silver, and same story. The stock market rallies, this risk-on trade will continue to deflate, and you'll see probably at least another move down to that 1642 level, and quite possibly more if the market goes on to new highs. We'll see. We'll take it one step at a time. We're still within the triangle pattern. We're closer to the top. And of course, this would be the the bullish resolution for silver, which would most likely align with the markets taking another leg down. So you have that previous high there and another previous reaction high. And if both gold and silver take out these highs, that should open the door for the next trend up. But until then, a lot of work to be done here. And finally, CL. was highlighted the morning before yesterday, so that would have been Monday morning, as exactly right here, actually a little below that trend line, saying a back test, a little brief overshoot. It's gained about, it ran up, hit my first target today, that 53.81. Remember, these are unofficial trades. If I don't have T1, T2, if I don't state it clearly as an official trade with trade parameters, price targets, suggested stops, it's unofficial. And on those, I'm showing you the actual resistance level where a reversal is likely. On longs, I always step in and sell a little shy of the actual resistance level, and on a short trade, I'll cover a little below the actual support level I expect to bounce. So that was, I think it reversed a hair shy of 53.81 today, and that was, for all intents and purposes, a hit of that first target. And on those charts, you had the arrow breaks, which indicate, always draw it out. An arrow break indicates a reaction. So whether I draw the down arrow or not, and that's the reaction. So where am I going with that is right now we're pulling back to this potential uptrend line. So this would be an objective long entry here. I have my concerns about how much more upside's left in the stock market, but just looking at this chart alone, it's objective there with a stop not too far below. You have these reaction lows right there. You could maybe stem around 51.80, a little below that, for the next swing up there to that 54.74 target. Otherwise, if it breaks down, could go on to extend this divergence that's in place. We had divergence at the previous low. If we go and make a marginal new low, it will still have a positive divergence, at least for a while, unless it really goes down from there. So that's CL. Like I said, my convictions aren't high enough to add it as an active trade. It's more swing trading stuff. I think, again, that was about a 3.5% or so gain so far on there. All right, let's wrap it up here and see what the markets do. We'll see how they handle those gaps today. I don't think we're going to have a lot of insight as to where, at least nothing big on the weekly charts as of yet. There's still 2 more days to go in the week, so let's just take it one step at a time. And again, right now my focus, remains on these intraday time frames right now on, really on the stock market I'm talking on, but on crude as well. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.